My name is Alex Ciappara, and I'm the Director of Credit Markets and Economic Policy of the Canadian Bankers Association. We're here today in the lovely ballroom of the Royal York, where we just heard the chief economists from the five largest banks give their views for the economic outlook for 2018. The Canadian economy is in its sweet spot right now. We've got unemployment rates at 40-year lows. The employment numbers came in this morning, and it came in at 5.7%. That is the unemployment rate. So the unemployment rate is doing quite well. This bodes well for the Canadian economy. We're expecting interest rates to increase 2 to 3 times. That's what the chief economists have been suggesting. A signal that the economy is robust and it's in the mature phase of the business cycle. Possible impact of NAFTA on Canada and the cancelling of NAFTA on Canada. The risks are somewhat manageable. I think Canadian businesses are quite adept and agile at working around this. If NAFTA is cancelled, we fall back to WTO rules more than likely. That means tariff rates will be in place, but at lower levels as well. Canadian businesses will be able to work around that and manage those risks, and Canadian banks will be there to help them do that. There's another thing we need to look at, which is the competitiveness between Canada and the U.S. in 2018. As we all heard, the U.S. legislature in the U.S. presidency passed a tax bill that will lower taxes for businesses in the United States for the upcoming year. This has an impact on Canadian competitiveness as well, and I think policymakers need to look at that. So where we look at ways that we can improve the Canada's economic competitiveness by making it more innovative. In the financial services sector, this means investing in fintechs. This means partnering with fintechs. And the Canadian Bankers Association has provided its views with respect to investment and partnering with fintechs in its Bank Act submission to the government that it would be considering.